what market experts made of the FOMC decision to hold rates this time.
It's just an acknowledgement of a reality that's been in place for really quite a while. So markets are certainly happy with this slightly more dovish tone from the Fed. I don't think we should be overly concerned about growth in the US or indeed anywhere else. If you think about the concerns that were being expressed in markets at the beginning of this year, there were plenty of people talking about the possibility of a recession in the US, which really never made any sense from our perspective, and big concerns about China, which also didn't make a lot of sense from our perspective.
So it's sort of a Goldilocks report if you don't look too deep, and so far the market hasn't. And that is, look, things are just bad enough that we're not going to make it any more expensive for you to go into debt, and just good enough that we're still positive about the future. That's kind of the Goldilocks, not too hot, not too cold. On the other hand, I think what we're seeing is this is a patient, the economy, that still can't get off the ventilator, and we're no rush to take this patient off the ventilator with the usual verbiage that the patient is super healthy and that's why they're enjoying a wonderful outdoorsy lifestyle attached to the ventilator.
While the US economy is doing relatively well, unemployment is low, CPI is rising, the rest of the world still is feeling a lot of pain, and there is serious worries about a global recession and deflationary environment across the rest of the world. So I think it's a delicate balancing act, and any sharp change in the US interest rate cycle, while that might be good for the US economy, it may not bode well for the currency markets.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.